Hey, good afternoon, everyone. This is Rajan Anandan here. I am the president of Thai Delhi in NCR and also a managing director at Sequoia Capital, which is a venture capital firm. It's a global venture capital firm, including, we are very active investors here in India. So first and foremost, I wanted to welcome all of you. I see that there's a very large number of you attending today's call, which is understandable given what's happening around the world as well as in India and the impact that it's already had on startups and is likely to have on startups going forward. I also wanted to thank Startup India and Invest India and Thai Delhi NCR for helping us put this together. And this is going to be the first of many AMAs that Startup India, in partnership with Thai Delhi NCR, is going to have over the next several months to help our founders from across industries, across stages, and across India address the current set of challenges and work through the next set of months, which are likely to be very, 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 very difficult, not just from a business standpoint, but also, as all of you know, from a health standpoint. So this is structured as an Ask Me Anything. We've got a large number of questions that have already been submitted. So I am going to try to get through as many of them as I can. I can't, we have an hour, so I don't know how many of them we can get through. And then Kritika also told me that there's a large number of questions that have come in since I got the document about 30 minutes ago. So we may not be able to get through all the questions that you've submitted. But the good news is Startup India together with Thai Delhi NCR will have, as I said, a series of Ask Me Anythings from different industry leaders, entrepreneurs, as well as investors and so on. So you will get ample opportunity to ask all your questions in case I can't get to one of your questions today. So that's I wanted to start with that context. Let me before I get into the first set of questions, I just wanted to start by sort of saying something that I think all of you know, which is we are now in an unprecedented time, right? We have clearly the most severe global healthcare crisis that the world has seen in over 100 years. We have not seen anything like this, since the Spanish influenza in 1918. It is global. It is spreading very, very rapidly, and as you've seen from around the world, it is causing significant challenges both on the healthcare side, which clearly impacts human lives, as well as massive business disruptions across the board. So I think all of you know that, but this is very, very serious, which I assume is why all of you are on this call. Now, if you're running a startup anywhere in the world today, including in India, there are a few things that are very, very important. First thing you should keep in mind is, nobody, and I mean nobody, can accurately predict what's really going to happen, right? In terms of how long is this going to take? But what we do know is that it is not a phenomenon that is going to be 2, 3, 4, 5 weeks, right? I'm not talking about the lockdown. We have a lockdown for 3 weeks. We are now in day 8 of the lockdown. But what we don't know is how long it will take for the world as well as for India to really be able to get COVID-19 quote unquote under control, meaning where consumers and businesses can go back to the way things were. And it is not a 2, 3, 4, 5 week phenomenon, right? So from a planning standpoint, I think that is very, very important. And before I get into the questions, for those of you that are thinking through, if you're a startup founder that are thinking through what you should be doing in this environment, there are a few things that you should be thinking about. Firstly, in fact, I'll try to put it on, I don't know whether, Kritika, if I post something on the chat, whether everybody will be able to see it. Actually, yesterday, all the venture capital firms, many of the venture capital firms in India got together and have put together a pretty comprehensive set of perspectives on how startup founders should try to navigate through the current environment. And it talks to everything from scenario planning to how you should think about resources, to how you should think about your cost, all the way through things like how should you engage your teams, how should you deal with customers, and so on and so forth. So I'll post that on the chat for those of you that haven't seen it. I'd encourage all of you to go and read it because again, this is an unprecedented time, and it's very, very important that that each of you think through this very, very carefully. The only thing that I can tell you that we do know is, one, it's not a 2 or 3 week phenomenon, and the other thing I can tell you is that the business plan that you had for your startup, I should say the annual operating plan, to the extent that some of you have annual operating plans in terms of what you think is going to happen to revenue and so on and so forth, even a week ago is not valid, right? So if your annual plan was from 10 days ago, it's not valid anymore, and you need to really go back to the drawing board and think through how your business is going to evolve, right? And there's no straight line way to do this. In fact, what you'll see in this document, this Medium blog post that I'll post later as towards the end of this call is that you should be thinking about scenarios, right? What happens if this is only you can have there are two variables that are important here. One is lockdown. Is this a 3-week lockdown or could it go longer? And then secondly is, even let's say if the lockdown was only 3 weeks and it's not clear, current lockdown is obviously for 3 weeks and the government's been very clear about that. But how long will it take for India, for that matter, for any country, to take control of what's happening, right? Because that's when consumers will be out there again. That's when businesses will be back to doing businesses. So I think thinking through those scenarios, and you'll see some frameworks that you can apply should be very helpful to you. So I'd encourage all of you to read that. In fact, Kritika is just telling me I should post this doc. So give me a second here. I'm going to find the doc and post it. All right, chat. Kritika, did that get to everybody? It said it's going to all the panelists, but I don't know whether, okay.
Please select all panelists and attendees.
Asta says that she got it. I don't know how to do that. Maybe Kritika, you can take that and repost it to all the, yeah, Puneet says that he didn't get it. Let's see here. Maybe what you can, yeah, actually, I think a lot of people didn't get it. Kritika, can you?
I will reshare it with all attendees.
Yeah, if you can. Yeah. Oh, wait, hang on one sec. I got it. All panelists and attendees. Okay, got it.
Yes.
Do that again. Okay, 1 second, guys. Okay, we are sending it. Okay, there you go. Is that better? Okay, cool. All right, sounds good. So take a look at that. Hopefully it'll be very useful. And then if you have questions, obviously, you should ping all of us. All right, so that is the context. Now this is an ask me anything. So what I'm going to do now is I'm going to go through questions. Now we've tried to group these questions into different types of questions. So I'm going to start with, there were quite a number of questions that were specific to the ecosystem and how the current environment and the current challenging situation that we're in is going to impact the ecosystem. I'm going to read out the question and as well as who submitted the question, and then I'll try to answer it. Okay, so let's start with the first question. Work from home has the potential to become the new normal even post-COVID crisis. What could be some of the opportunities, disruptions in this space, which will become way of life in the coming decade? And this question is from Swaminathan Gopal. So look, I think work from home, has been, I would say, very, very selectively used in some, like for instance, in the technology industry. People were working from home, but it was really not the normal. But I would say, outside of the technology industry and maybe 1 or 2 other industries, work from home was not a thing until the COVID crisis, right? So I think the first most important thing is, you're absolutely right. I don't know, by the way, I don't know whether it's going to become the new normal, because I do think, people are going to go back to work. If I ask all of you, the large number of you that are now actually on this, founders who are on this call, whether all of you will go back to the office, I think most of you would say at some point you will go back to your office, and you will have many of your teams come to the office. But I do think what it will show, not by choice, but because we've all had to do it, is that you can actually run large parts of a company and a business, even at very large scales, with teams that work from home. So, and I think knowing that, I think work from home will become much more prevalent across many industries and many sectors around the world, including in India. And I think this will actually create many different opportunities, right? I think it will create opportunities for new kinds of tools. So I'll give you some that I'm quite excited about these days. So for instance, if you have today, I don't know what the latest number is, but let's say north of 1 billion professionals around the world that are working from home. That means that you have hundreds of thousands, if not millions of companies that have to figure out how to drive employee engagement. Right, for those employees, and today, there are no tools that are built. There are some tools that were built for employee engagement, but they weren't built for the specific purpose that now you're going to have. Let's say if you're a company with 10 people or 100 people or 10,000 people, most of them are going to be working from home. And if they were working from home, how do you actually manage those remote teams that are working from home? How do you engage them? How do you keep them excited, and so on and so forth, right? So there's going to be a whole set of tools. And then actually the second set of tools I would say are going to be around how to get work done, right? If you're an engineering team, it's not, you can work from home, but it's not easy, right? So I think across functions, whether it's engineering, product, sales, marketing, and so on and so forth. And then look, Zoom is currently, I think, one of the hottest companies in the world right now. We're on Zoom as we speak. But I do think we're going to see many more collaboration platforms that will come. So there's going to be lots of innovation that will actually happen in this space. And then it's also going to, I think, be a big boost for certain kinds of jobs where people will decide. In fact, one of the questions that was also asked was what will happen to freelancing, for instance, right? I do think freelancing will become much more prevalent because people now will be able to work from home, and also companies will be much more open to people working from home. So hope that provides some clarity on that question. So let's go to the next question. What are the parameters to see in a business to clearly know that it's time to shut down the business and move forward to some different high growth opportunity, or maybe find a job in a high growth area? And this question comes from Onkar Bosley. It's a good question, and it's relevant, especially I think for many startups as well as small and medium enterprises. So sort of the way I think about this is, how much runway do you have, right? The way you should think about runway is how much cash do you have in the bank? And if you so there are two kinds of companies, right? There are companies that were profitable before sort of the COVID shutdown, and there were companies that were unprofitable before the COVID shutdown, right? In both those kinds of companies, the situation is slightly different, right? If you were a company that was unprofitable before the COVID shutdown, and let's say you only have 1 month of cash left, I think that gets to be very, very challenging, because even if you tried to take many different actions, you may not be able to extend your runway for more than 2 or 3 months, right? And in that scenario, and by the way, shutting down a business is absolutely the last thing that you should get to after you've explored all other options, right? After you've explored whether you can create more runway for you so that you can stay with the business for longer than, let's say, a month or two. After you've sort of seen whether you could, find somebody else who would, after you've seen whether you can actually raise funding to extend your runway, after you've actually looked at, let's say, an option to have another company maybe acquire your business. So there's a whole set of other choices that you should think through. And in fact, these are a lot of the details that we've tried to articulate as an industry in this Medium post that you would see. So runway, how much cash runway that you have, is very, very important. And the reason this is important is because this is not a 2 or 3 week 2 or 3 week phenomenon, right? It is likely the impact on demand, the impact on revenue, the impact on your business is likely to last much more than 2 or 3 weeks. It's going to be at least a few months, if not many months. And then depending on your business, it could be even longer, right? So for instance, if you're in the international travel industry or you're in the hotel industry, it could be much longer. So I would say it is very, very, but on the other hand, let's say you're a business that was profitable, or let's say somewhat profitable before the COVID crisis, and you have, let's say, 18 months of cash runway, right? And cash runway assumes, by the way, you look at your costs that you have, you either say there's going to be no demand, or you have a different state of demand that you had, let's say, before the COVID lockdowns, and you say how long can you go with your business. And that's sort of what cash runway is, right? And if you have, let's say, cash runway of 18 months, even for those companies, we encourage you to figure out how can you create more runway. So maybe get your runway that you have to something like 24 months. And then you're actually in what we might think in a much better zone, right? And you don't need to consider some of the kinds of radical actions that you've described here. So a lot of it is dependent on cash runway, but I think it is something that you should think through very, very quickly. Okay, what will happen with jobs after COVID-19? This is from Sachin Saini. Look, good question, right? I mean, look, we don't know what will happen to jobs other than, look, mankind or the human race has overcome every single challenge that we've been thrown at over 5,000 years, right? So the good news, if you can see a silver lining in the current crisis, is we will get over this as well, right? As the human race will get over this as well. And when we get over this, there will be lots of jobs, and jobs will continue, and there'll be new kinds of jobs, and so on and so forth. What we don't know is how long will it take for us to get back to sort of normal levels of demand, right? And that's the really big question. And that is the uncertainty that we have with the COVID-19 crisis. And that's why it's much harder to sort of plan your business in this crisis, as opposed to, say, even, let's say, 2008 crisis, right? Now, in terms of jobs, I do think we are going to see a massive amount of growth in several sectors coming out of the COVID-19 crisis. I think we're going to see 5x or 10x more investments in areas like healthcare. I think we've, across countries, the realization has come, whether it's the US, countries in Europe, or even a country like India, that we do need to invest a lot more in healthcare, a lot more hospitals, a lot more doctors, a lot more nurses, a lot more technology. So I think there's going to be a whole set of industries like education. I think education the migration of education to online education, I think the transition, if you will happen much faster, right? So I think there's going to be, the good thing is, look, there are going to be jobs, because, as the world will get back to normalcy. What we don't know is exactly how long that is going to take. Okay, so let's go to the next question. When do we expect to business as usual this year, and what would be the future of smart cities in India? So one thing that you should know about me is I know a few things about a few things, like startups, but there are a lot of things that I don't know anything about. And if I don't know a lot about something, then I will try and not answer the question. So when it comes to smart cities, look, I'm not a smart city expert. So I won't be able to answer your question about smart cities, but I can try to take a crack at the first one, which is, when do you expect business as usual this year, and what would be the future of smart cities? So let me try to answer the first part of that, which is, look, business as usual depends on the industry that you're in, right? So for instance, if you look at the startup ecosystem, if you're in, let's say, in the edutech space, or you're in the online gaming space, or if you're in the online collaboration space, or the remote working space, remote collaboration tool space, right? Or even, let's say, if you're in healthcare, or if you're in food delivery or online grocery, you're actually right now, you're growing faster than you were before, with the exception of like, for instance, online grocery, food delivery, and online pharmacy. The challenge there has been for a couple of days after the lockdown last week, deliveries were not possible. And I think now some of those companies are challenged with not having enough labor for their warehouses and delivery people, right? So I think those set of industries are, quite frankly, going to grow much faster, than they were before, because they were industries that are going to have tailwind because of COVID, right? Then there's actually another set of industries that are most likely to take a very long time to recover, right? So if you're in the international travel space, right, airlines, look, let's face it, borders are closed now, right? And it's unlikely that borders are going to open in the next month or two. Maybe they'll selectively open, but the entire world is not going to open up borders again for international travel in the next 2 or 3 months. So if you're in the international travel space, if you're in the hotel space, it's going to probably take quite a long time. And again, one of the key things that you should take away from this session is, we don't know how long it's going to take. So as a founder, then you need to plan under different scenarios. And that's why it's very, very important to be thoughtful. And the only plan that will not work is assuming that this is a 2 or 3 week phenomenon is not a good plan. Don't assume that, right? So that's on the other end of the spectrum, right? Where it could take a very long time for demand to recover. And then everything else in between, I think is depends, right? I would say it depends, right? So for instance, if you're building a SaaS company and you're selling to large enterprises in the US, when will you be able to sell to those large enterprises, and when can you really close deals? Because it's very likely that for the next 3, 4, 5 months, you may not be able to have in-person meetings, right? Especially if you're sitting here and then you're planning to go there and close deals. So how many of those deals can you get done through Zoom and other online platforms? Unclear. So those businesses demand will come back. It'll probably come back in less than a year, but we don't know whether it's 3 months, 6 months, 9 months. So I would say, so it really does depend on when business as usual happens will depend on the industry that you're in, and that's why you have to be very, very thoughtful. We go to the next question. How do you suggest one should go about surviving through these times when the demand across most sectors go down? Would be great if you could touch upon marketing spends, should not, and letting some folks go. Yeah. Okay. So look. Again, I come back to Runway, right? If there's one thing, there are many things. Hopefully, at least a few things you'll take away from this Ask Me Anything session. One of the most important ones is focus on extending your runway, right? If before COVID you only had, let's say, 6 months of runway, find a way to make it 12 months. If you had 12 months of runway, try to make it 18 months. If you had 18 months of runway, try to make it 24 months, right? And how do you do that? Well, you do that by first and foremost trying to see if you can recover demand as soon as you can, right? And we can talk about that. I think it's important to talk about that. But the reality is, as we just talked about in the session before, demand, depending on the industry that you're in, may actually take a long time to come back, right? And in which case the only set of variables that you have is really on the cost. And the way I think about cost is, firstly, keep in mind that when you get into an environment like this, there is no such thing as fixed cost, right? Because if you're in a normal business as usual environment, you would look at fixed costs. What are fixed costs? Things like the rent that you pay, things like the leases that you have. If you have warehouses, you have leases in them, right? What are the other fixed costs? The software licenses that you pay for, and so on, right? So there's no such thing as fixed costs. You should be looking at every single cost line item that you have, right? Take a look at your rent, renegotiate your rent. If indeed your team's going to work from home for a long period of time, maybe, and it's a small team, maybe you can actually not pay rent, right? Take a look at every single line item that you have. Take a look at, let's say, cloud spends, right? Take a look at all the software licenses that you're buying. Take a look at all the contracts that you have. Because whether you like it or not, what's going to happen is your customers, especially if you're in a B2B business or even in a B2C business, your customers will want to renegotiate with you because they're going through a similar sort of crisis, right? Now, when it comes to marketing, I think you have to be very, very thoughtful. But keep in mind, marketing spends is one of the easiest things to either ramp up or ramp down, right? And I think in this environment, you should ask yourself, look, has revenue gone to zero, right? In many industries, revenues has gone to zero. So in a revenue zero environment, spending on marketing, may not be the best idea, right? Unless you're an e-commerce company, for instance, and you're doing performance marketing, which actually delivers transactions, right? And you're able to actually sell, right? So unless your marketing is delivering real revenue in an environment like this, especially if you're a startup, let's say, that doesn't have a lot of runway, this may not be the best time to be spending a lot of money on marketing, right? The other thing to keep in mind is, for instance, there are a large number of direct-to-consumer brands in India, and it's very interesting. I was yesterday on Instagram, and I saw a buy now ad for a product that cannot be shipped, right? The product cannot be shipped because it's not on the essential services list. So, and I was asking myself, why is this brand running an advertising to get me to buy something when the whole world knows that they cannot deliver this product because for the next 2 weeks at a minimum, we are going to be in shutdown mode. This is not a product that's an essential product, right? So to me, that is, number one, not the wisest way to actually spend money. But number two, it doesn't create the right impression of your brand on me as a consumer, right? On the other hand, what you should do is you should be obsessing about your consumers at this point, right? Even if you're, let's say, a product company or a transactional company or a commerce company, even if you can't sell anything, which is likely for many companies that are those kinds of companies, the reality is you've got customers, right? And this is a great time to engage those customers. And to engage those customers, you may want to spend marketing money, but quite frankly, today you don't have to because you've got them captive, right? Everybody is at home. Everybody's got a lot more time than they used to have. And you should find interesting ways in which you can engage them. And then lastly, look, I think one of these questions was, should you look at letting some folks go? I would say, look, you should get to your people cost only after you've looked at all other costs, right? Because this is the most important asset that you have. You've taken a lot of time to build your team, to groom your team, to make them excited. And before you actually get to your people cost, you need to look at all your costs, right? Now, if you actually look at all other costs, you've managed to get all other costs down, but you still don't have a lot of runway, then you'll probably need to look at your people cost, right? And when you look at your people cost, you should also not just, before you decide to let people go, look at all the other levels, right? So we are seeing, for instance, look at the founder salaries, right? A lot of founders, I'm sure you've read, whether it's companies of very large companies, CEOs, founders of very large companies, or earlier stage founders, they're taking pay cuts voluntarily for themselves. Leadership teams are taking pay cuts. You could actually have people go on furlough saying, look, there's no demand for the next 3 months, so we'll have to do that, etc. And then, the last option obviously is to think about restructuring. But all of the math needs to add up, right? Again, I keep going back to this, is really focus on the runway and make sure you're doing what you can to extend runway as much as possible. Let's go to the next question. Question number 6. And by the way, question number 5 was Dave, surviving through these times. And I didn't read out some of the other questions, but Ajay and also Sachin Saini had asked those questions. The other questions that I went through. Okay, question number 6. Discussing anything other than coronavirus and its social and economic impact on the different levels of society seems disingenuous. How can anyone focus on anything else, especially with people dying and others being affected by food shortages? At the same time, we should be giving people things to think about besides obsessing about the coronavirus. What do you believe is the right balance between being sensitive while still moving forward? And the question is from Serena Richard. Look, one of the reasons, actually the single biggest reason, if you're a founder, that managing through the current crisis is much more challenging than other crises that we've seen, is because other crises were only about, they were financial, right? The 2008 crisis was a global financial crisis. It was a financial crisis. This crisis is different because it started off and still is a healthcare crisis. And it is the most severe, nothing like it we've seen, right? Literally in over 100 years, we haven't seen anything like it from a healthcare crisis. And you're absolutely right, where people are not just reading about the fact that, people are getting sick and there are lots of deaths around the world, but the reality is they're worried about their own health. They're worried about their own safety. They're worried about the health of their families, about their friends, their teammates. And you have the added complexity of having to worry about your business because, your demand has either gone to zero, has been severely impacted, and you don't know how long it's going to last. So as a founder, so what does this mean, right? I think the most important thing you should keep in mind is take care of safety and health of yourself, of your families, and your teams, right? Make sure that you are focused and obsessed on that, right? Now, with the lockdown, one of the most challenging things that we had in the ecosystem is how do we get everybody to work from home? That was, temporarily solved because now you have to work from home. So people are figuring out how to do that. But take care of your teams, right? Keep in mind that people are very worried. And so employee engagement, engaging your teams is super, super critical. It's actually employing your teams is more important than any other period that we have seen in a very, very long period of time, because your entire team is working from home. As you've highlighted in this question, Serena Richard, by the way, is who asked the question, is worried about, health, right? Is seeing all this sort of negative news. So you've got to really focus on employee engagement. But the reality is, if you're a founder, you also have to focus on your business, right? You started a company because you wanted to build a big company. And by the way, what will make you a great founder over a period of time is being able to lead through periods like this. It is an unprecedented crisis, but the reality is founders have lots of crises that you have to lead through. This is probably bigger than anything else that many of you have seen, but you have to focus on the business, right? You have to figure out, how are you going to extend runway? You have to figure out and make assessments of when is demand going to come back. You have to figure out what are you going to do with marketing? What are we going to do with your contracts? What are you going to do with your production? For instance, right, you may have to close down your warehouse in many cases for 2 or 3 weeks at a minimum. And it could be that those warehouses need to be closed for a while. So you have to make all these decisions. And I would say the founders that make it through a crisis like this are very thoughtful, but they're also decisive. So the other one of the things I'd like for all of you to take through, for the founders on the call, is, wait and see, meaning let's wait and make decisions, in a month or 2 or 3 or 4, is not a good idea, right? Plan, model out your scenarios, see where you might land up on those scenarios, but then be decisive, because not being decisive in a period like this is what has actually driven a lot of companies out of business in prior crises like this, right? So I think hopefully that answers it. So yes, you should absolutely be focused on health. You should focus on safety of yourself, of your families, of your team members. You should double down and triple down on employee engagement. But you should also focus on the business, because you're the founder of the company. And if you're not focusing on the business and how to make sure that your business survives, right, and your business is scalable, then you're not doing the right thing by your business. And that is why this crisis is very difficult for many of our founders, because they're dealing with both of these. They're always used to, by the way, dealing with business crises, not of this scale and magnitude, but they're used to doing that. Okay, so let's go to the next question. This is from Maha from PBX Craft. Do you have a checklist that you think should result in a decision to shut down a startup now? Like if you check 3 or 4 of these, better consider shutting down. So look, I would say, I tried to answer this question before. It entirely boils down to Runway, right? For instance, if you really don't have Runway, right? You're a company that has no cash in the bank. If you don't have existing investors that are going to step up to support you, meaning, if you have an existing set of investors that can maybe keep you alive for at least another 12 months, that's pretty important. You're in an industry that is severely impacted, right? Let's say where the demand is highly unlikely to come back in 2 or 3 months. You may not have any other option, right? So do take a look at this Medium blog that we shared, that we developed as an industry together, because I think you might be able to think through some of that. And also, by the way, connect with other, if you're a founder, connect with other founders, and talk to them about how are they thinking through their scenarios and so on and so forth. Obviously, at Sequoia and every other venture capital firm, we are spending a lot of time with a lot of our founders, really helping them think through what they should do with their businesses. Okay, going to the next question. This is from Geetika Bhatia. B2b startups get hit the most during such a pandemic and the following bumps of economic downturn. What are the few of the key easy fixes B2B players can look at? By the way, there are no easy fixes in any business at any time, right? So I think that's important to keep in mind if you're running a startup and you're trying to build a startup. By the way, keep in mind that B2B startups are not the most impacted. The most impacted are startups in travel, hospitality, offline retail, etc. Right? And if you're a B2B startup, obviously selling into travel and hospitality, then you're impacted in a very serious way. But it's important to keep in mind that there are there are companies that are very, very severely impacted, where revenue has gone to zero and it is unlikely to recover for a very long period of time. So keep in mind. Now for B2B startups, again, right, there's a set of things that you should be doing regardless of what kind of business that you're in. Those are the kinds of things we've talked about, right? Make sure you're driving, you keep employee engagement very high, work through the different scenarios, make sure you extend runway, look at all the different levers that you have, etc. I think for a B2B startup, one of the most important things that we haven't talked about here is stay very, very close to your customers, right? Be proactive with your customers, because when you get into an environment like this, one of the things that I've seen in the past with some companies and founders is they tend to go into a shell. They don't talk to anybody. They don't talk to your customers. This is the time that you should be proactively calling your customers, ask them how you can help. In fact, one of the companies that I'm very closely initiated with, they actually sell software into a vertical that's pretty impacted, right? They've said, look, for the next 3 weeks, we're not going to charge you anything, right? In fact, we will not charge you anything for the next 3 weeks because we know that you don't have a business. So stay very close to your customers. And as you stay close to your customers, what I always see is that your customers will start giving you ideas. So for instance, if you're selling into, let's say you're selling into offline retailers, right? Every single offline retailer today, or every single offline consumer brand wants to accelerate their transition to digital. So what kind of opportunities that can create, right? It probably creates all kinds of very interesting opportunities. So stay very, very close to your customers, listen to your customers. And the other thing you should do is use this opportunity to also see other adjacent segments. So I'll tell you another B2B startup that is actually in our portfolio, in our search portfolio. They were actually selling into large enterprise and mid-market customers. But what they started noticing about 3 weeks ago was they started getting a lot of inbound from small and medium businesses, right? Because small and medium businesses all of a sudden were looking for the kind of solution that they had, right? So what they've done is they will obviously long-term continue to focus on large enterprises, but they said, look, let's quickly sort of figure out how we can capture this large demand that is going to come from small and medium businesses. So I would say stay very close to your customers, be very proactive with your customers, and then keep your eyes and ears out for what is happening, in the space that you're in. Because what you see in periods like this, demand will come from places that you don't see, right? So I'll tell you another company that I'm very close to, which is in the marketing automation space, right? What they've started seeing is a lot more demand coming from the high growth verticals at this point, right? Edutech, gaming, healthcare companies, and so on and so forth. So they have actually decided to, take almost their entire sales force and now really start focusing on these high growth verticals. Okay, going to the next question. This is from Ankit Podar. Cash is the king now. How do we curtail it? Will it be right to propose a salary cut or defer some of the high paid employees? If so, how should we tackle situation of convincing everyone? So I would say, as I mentioned, right, this is very, very important. Look at every single item that you have on your costs. Look at your rent, look at your leases, look at your software licenses, look at your cloud bill, look at your marketing spends, right? And so on and so forth. There are a lot of things that if you're a startup, even if you're an early stage startup, that you're spending on before you get to people cost, right? And then if you have to, depending on the runway that you have, and again, right, runway is king actually. Cash is probably even more important than runway, but it's about cash runway. So then you have to actually get to people cost, right? And as I said, look, in people cost, yes, think about all the different levers that you have, right? And in fact, you should take a look at this Medium blog. I keep coming back to this Medium blog, but it's actually got a whole set of levers. When I say levers, ideas that you can look at, right? Look at salary reductions. I mean, you should start with obviously the most senior team because they tend to be the most well paid. Because look, everybody understands, that this is a very, very difficult environment, right? This is not an environment that the world has seen for 100 years. So, look at that. Look at whether, whether you can keep people on but they're not going to get paid for 3 or 4 months, right? Look at what you can do with, maybe some people should only work 3 days out of 5 days, right? And therefore, you compensate them, so on and so forth. And then finally, you may have to take very tough action, right? And we are seeing a lot of that as well. In terms of how you tackle the situation in convincing everyone is be transparent. Lay out every single, I'm very proud. One of the companies that I'm very close to is, they have laid out exactly what the situation that their company is. Share with them exactly all the challenges you are. Share with them the runway. Share with them in the market. Share with them what's going on with the funding environment. And then you should say, here's what we've decided to do, right? And be transparent. Because sometimes, what you'll do is you won't be transparent. You won't tell them, you'll only share with them 75% of the story. And that actually usually backfires because then employees start assuming what you're trying to do. Keep in mind that everybody realizes, right, that the country is shut down for 3 weeks. Everybody sees the news so that they know that some countries like China, Wuhan was shut down for 2 months. China is now getting back to work, but keep in mind, China effectively was shut down for 2 months before they got back to work, right? That's what I mean. This is not a 2 or 3 week phenomenon. And you should be very, very transparent with your employees and you should share with, keep in mind, if you're a founder, being thoughtful and being decisive is extremely important. Don't wait for 1 or 2 months to see whether this is going to be not as bad as what people are saying it is, because being decisive is very important, right? And then also making, what I call, reductions or cuts sequentially, right? Making small cuts every 2-3 weeks, which some companies will get into. That is really bad for morale. That is really bad for morale because keep in mind, people just don't know what's going to happen next. What's going to happen next? So every 2 weeks, they're trying to figure out, okay, what's going to happen next, right? So, we are big proponents of being decisive. Okay, now let's go to the next question. This is from there's a whole set of questions on fundraising. I've tried to answer some of these already, but I'll try to go through these questions. The first question is from Anurag Joshi. How will the investments in startups be affected? And what can startups do to survive this epidemic? So what can startups do to avoid this epidemic is extend your runway. Extend your runway. If you've got 3 months, make it 6 months. If you've got 6 months, make it 12 months. If you've got 12 months, get it 18 months. If you've got 24 months, you're probably in an okay place, but anything less than that, keep trying to extend it, right? Look, in terms of startup investments, the good thing that all of you should know is there is enough dry powder. And when I mean by dry powder, that is capital that is uninvested in the Indian venture capital ecosystem than we've ever had, right? So as an ecosystem, if you look across the funds, there's a lot of funds that haven't been deployed. Now, that being said, you should know a few different things, right? One, every investor, whether it's an angel investor, because there's some questions on angel investor, or a venture capital fund, actually has a portfolio of investments, right? They will focus a fair bit of their time and energy on making sure that the startups that they have invested in can extend runway, right? The startups that we invested in can manage through this crisis, and that will take a fair amount of effort. The second thing you should keep in mind is, because of the uncertainty, it is going to be unclear how and when demand will recover, right? So that is actually a big uncertainty, because if you put yourself in the shoes of an investor, how do you know when demand is going to recover? How do you know how much, to what extent demand is going to recover, right? Because all you know is that the business plan or the operating plan that you had 10 days ago is no longer valid. So that creates a set of complications, right? The third complication is, at least if you look at the next 3-4 weeks, you can't actually meet anybody, right? If you're, let's say, an investor who's sitting in Delhi and a company is based in Bangalore, we don't know when flying is going to be allowed, and more importantly, when will somebody want to take the risk to get on a plane and go there? So there's sort of a timing risk associated with being able to evaluate companies. Although I must say, Zoom calls and being able to evaluate companies on Zoom calls is sort of an all-time high. So all of these are complexities, right? So what does this mean? What it means is that the fundraising that maybe you would have thought is going to take 30 days or 60 days or 90 days, unless you have something that is absolutely finalized where your investors are still continuing to invest, may actually take much, much longer than you thought, than you would have planned before, right? Unless obviously there are there are investors who are already part of your company that are willing to step up and fund you. Now, all this being said, I'm with Sequoia Capital, and at Sequoia Capital, I lead a program called Surge that we have for seed stage and very, very early stage companies. At Sequoia Capital, we will continue to invest. So for instance, Surge, we do a cohort-based program. We have our third cohort, which will start in about 2 weeks. We're very, very excited. In a few weeks, we'll be able to talk about the companies that we have in our next cohort. And this is a rolling program where you can apply to Surge anytime you want, and we will decide to invest. And if we decide to invest, you will join whatever the next cohort is. So we've already actually started making investment for our fourth cohort, which is going to start in September, right? And that's at the seed level, but also as Sequoia, we continue to be active at Series A, B, C, D, E. So despite all the challenges that I did mention, keep in mind that investors will continue to invest. It's just that there are a set of complexities that will make it maybe harder than what it used to be before. Probably the last thing I would say is, investors are going to be much more prudent and look for businesses that can have what we call a viable economic engine, right? So what I mean by that is, no startup is profitable in day zero or in the first year. A lot of them are not in the first year or two, but there has to be a path to being profitable, right? So for instance, I don't know how many of you focus on your unit economics. I assume most of you do. But if you have negative unit economics and you're a very early stage company, that may not be a great place to be today, right? Because today, everybody is much more focused on companies that can build a viable economic model. So that's a lot to think about, Anurag, but hopefully that was helpful. The next question is from Dipesh. What are the hurdles to raise funds now, and how to overcome it? I think I just addressed all of those questions, right? You want to make sure that, look, the reality is, if you only have 1 or 2 months of cash runway left and your existing investors are not willing to step up, it may be very, very difficult, right? So make sure that you keep extending runway. And then once you extend runway, first start with investors that know you well. Look at which investors are investing today. So for instance, Sequoia continues to invest. So you should reach out to firms like Sequoia who continue to invest. If you're raising, for instance, if you're a seed stage startup that is looking to raise funding, you should apply to Surge. Surge is You can apply to Surge anytime you want, but there are many other firms that are continue to invest and do that. But also make sure that you're very focused on unit economics, right? By the way, I don't mean unit economics now because you may not have any revenues. If you don't have any revenue, you don't have unit economics, right? But unit economics before the, let's say before the lockdown happened last week, how were your unit economics? And whenever you do go back to business, I mean, you will get back to business, right? Whether it's a few weeks from now or a month from now, it'll start ramping very slowly. Obsess about unit economics. I think it's very, very important. Okay, go to the next question. This one is from Serena Richard. Can you discuss the fundraising market in India? No one can predict how long this will go on, but what are funds doing to prepare the worst case scenario where this lasts for longer than a few months? Are funds mostly focusing on their current portfolio companies? I think I've tried to answer this, Serena. Yes, absolutely. Funds are focusing a significant amount of time and also significant capital for their existing portfolio companies, because these are companies that we partnered with for a long period of time, and we need to make sure that these companies can see it through. But that being said, many funds in India will continue to invest, right? I just talked about Sequoia, but there are many other funds and investors that will continue to invest. But you should make sure that you extend your runway, because assuming that a funding round, so let's say before you would say if you're trying to raise a Series A, maybe it took 2 or 3 months. It is very likely that your Series A may, and I say not will, but may take a lot longer than that. So make sure that you keep extending your runway. Next question is from Gotham S. Do you see April to June to be a low silent quarter for VCs from deploying fresh capital, new investments? Rather, would the focus be towards deploying additional capital? I think I answered this question. Firms will continue to invest, but it won't be, firms will continue to invest, but it will take more time, right? Very practical things. You cannot meet people face to face for the next couple of weeks. It may be a few months. You can't go to different cities. So which means if it's a team that you don't know already, it's going to be a little harder, right? How do you see angels working? What would they see this better time to invest in startups instead of stock market? It is unclear, right? Because I do think, by the way, angels will continue to invest. In fact, this is to the Startup India team. We should get Padmaja Ruparal, who runs the Indian Angel Network, on and ask me anything. So for those of you that are looking to raise angel money, please do try to make that. We'll try to get her to do an AMA over the next week with Startup India and Thai. But look, angel investors, remember, they're investing their own capital. And depending on the angel investor, they may or may not want to take the risk currently, right? Keep in mind, right? If you're a company where your revenue has gone to zero and you're in industry where you don't know when and how the demand is going to recover, you will be concerned about your demand, right? An angel investor will also be concerned about your demand. So on the other hand, if you're in an edutech company and your business is booming, or you're in a gaming company and your user growth and time spent and monetization is booming, you're going to see a lot of interest from angels. That's the other thing I didn't answer with the venture capital firms, right? If you're in an industry which happens to have quote unquote tailwind, edutech, gaming, online sort of essentials, if you will, right? Healthcare, products, services, etc. Food delivery, food brands, because people need to eat. You will see actually a lot of appetite and interest in those things. Okay, next question is from Lal Singh Daswani. As fundraising events are postponed, what would be the steps to raise funds during lockdown? I think I try to tell you this. Look, if you're a startup, first and foremost, if there are 5 steps, 1, 2, 3, and 4th step, extend runway. Find ways to increase runway and make decisions now. Second, approach investors who are already investors in your company or people who know you really, really well, because that's going to be. And then thirdly is, make a. By the way, the Ruchita just messaged me. The Ask Me Anything with Padmaja Ruparal, who's with the Indian Angel Network, is on April 8th. So for those of you that are interested, please do try to dial in for that workshop. Okay, going to the next question, Ritesh Shah. Why are investors asking to have minimum 2 co-founders or co-founder? When do you have an industry leader as a mentor? Why is it mandatory to have a co-founder? Is investor looking to just minimize his or her risk? I think it's a great question, Ritesh. Look, you keep in mind that some of the best companies in India have been built by single founder companies, right? Paytm, Vijay Shekhar Sharma is a single founder, right? And one could, it's such an extraordinary company that Paytm, that Vijay has built out of ATM. Mark Zuckerberg, founder of Facebook, single founder. Michael Dell, who I used to work for, founder of Dell, is a single founder. So there are examples of single founder companies. Just keep in mind. Now, that being said, look, the reason to have 2 co-founders, if you're a founder, finding a co-founder is very simple, right? Startups go through many, many ups and downs. All of you, assuming many of you are founders on this Zoom call, know it as we speak, right? This is an incredibly difficult time And having somebody by your side who's a co-founder just makes it easier, right? Because when one is down, the other one's not down. One, you can keep your spirits up. And then the other thing is, let's say you're building a tech startup, right? Having one founder who's deeply technical and one founder maybe who's much more focused on marketing, sales, and so on and so forth. That's helpful, right? Because between the two of you, your 1 + 1 sort of equals 3. So that's why it's good to have more than one co-founder, because you can get a lot more done. You can be complementary in their skills. You can actually be there for each other. But that being said, keep in mind, if you're a single founder company, you should point out to your investors, all these examples of companies, that incredible companies. Ritesh Agrawal at Oyo, right, is a single founder. There are many examples of single founder companies that are very, very successful. Okay, go to the next question. We have about 10 minutes left. Durga Prasad Majumdar. Will there be any slowdown in seed stage funding for the next few months? Although seed stage is 5 to 7 year investment horizon, but startups are naturally facing delay in taking their products to market because of COVID-19 situation. Will this delay in validating the business model by startups affect the early stage funding? So look, I would say, I just told you, right? It depends a lot on, I can't really comment because we don't have enough data. We'll be able to say in a month whether the seed stage funding dramatically slowed down. In general, you should assume that fundraising rounds are going to take longer than they happened before, right? Because of all the things we've talked about, lack of uncertainty, lack of being able to meet, lack of visibility on demand, and so on and so forth. That being said, look, I just mentioned to you, right? Surge is a very active early stage seed program where we invest $1 to $2 million in companies upfront, and we work with you for 4 or 5 months. We continue to invest, right? We start a new cohort in 2 weeks. We've already started investing in companies that are going to be in our Surge 4th cohort. So there's no one answer here, other than what I just kind of walked through, and which should be helpful. But keep going back to extend your runway, because raising your round is likely to take longer than it took before. The last question here on investing is from Vishnu Vardhan Yadla. With the uncertainty of business opportunities across the globe due to COVID-19, can you suggest best practices of ways of pitching to an investor who has apprehensions on his future investments, right? So I think, look, the first thing that you should do when you're pitching to investors is ask them the question saying, look, I have to ask you that. I'm just saying what you should say, right? Say, look, I have to ask you this because I know it's a very, very difficult time for the world, for India, for many investors, for many startup founders. Are you investing, right? Then ask the second question saying, what are you looking for? In your investments, right? Because that gives you and by the way, investors are perfectly fine with that, right? They will tell you, look, either we are investing, but we're going to go slow for a couple of months, or if you're like, let's say you talk to Sequoia and we'll say, look, we are investing, absolutely, right? And they'll tell you what we just mentioned. So I hope that's helpful. Just ask the question. All right, we've got 8 minutes left, so I'm going to try to get through. Now we're going to actually sectoral impact of COVID. So there's some sector specific questions. As I mentioned before, there are some sectors where I don't know much at all, so which I won't try to answer those questions. In others where I have some perspective, I'll try to give it to you. The first one is from P. Biswal here on this segment. Do you foresee that white collar freelancing, which is at very initial stage in India, will take a boom? Look, I think it's too early to say how the white collar freelancing will be impacted. But going back to the first question that I tried to answer, which is work from home will become an at scale thing across many industries around the world. That bodes well for white collar freelancing, right? Because if many more and by the way, it's more on the company side as well, right? Our company is much more open to people working from home full time, right? As opposed to, well, let's say, work from home 1 day a week or 2 days a week. If companies become much more open to it, and I do think companies will become much more open to working from home, that actually bodes very well for freelancers, right? And through the course of this, I think people, I think there are going to be a large number of people around the world that may also decide that, look, they want to change the priorities, right? They want to spend a lot more time with family, and so on and so forth. They want to do the things that they're passionate about, and so on. So hopefully that answers it. Next question is from Taranjeet Guy. Being an entrepreneur of an auto tech startup named Car Sab Kuch, my concern isn't obvious that startup funding will be drastically reduced and prioritized to healthcare, insurance, and related startups. No, actually, it is not obvious. Look, keep in mind that what we're talking about is a very significant disruption to business as usual, right? What we don't know, one of the things we should take away is what we don't know collectively as a world. I'm not talking about investors or any particular individual, but as a world, what we don't know is how long will this last, and how severe will the impact be across industries, and how long will it take for demand to come back. One of the things we do know, which I go back to, which is, the human race has overcome every single challenge, and this too will pass. Obviously, it's a very, very significant challenge. What do I mean by that? What I mean by that is every sector will recover, right? What we don't know is how long will it take for this recovery to happen, right? So what does that mean? In fact, this morning, actually, we talked to a very, very interesting startup in the broader auto space, right? It's very interesting. This morning, actually, we had a pitch call with them, and we were quite intrigued by this because they're doing something that's very, very interesting. Now, that being said, look, healthcare, insurance, gaming, edutech, work from home, collaboration tools, those segments, have accelerated because of what has happened, right? And therefore, naturally, you will see probably more investment dollars that will go into that segment. But that doesn't mean every other sector is not going to get funded. So hopefully that helps you answer the question. For B2b blockchain as a service company, how to get clients in a condition such as COVID-19. So this is from Dipansh Singh. Dipansh, as I mentioned, I'm not going to answer questions where I don't have an informed point of view. So unfortunately, Dipansh, I don't have an informed point of view, but maybe Gitika and the startup, Gitika from Thai and the Startup India team, if we can get back to Dipansh and maybe connect him with an expert who can help him think through the B2B blockchain question. All right, the next question is from Jazz. A long question. We are a consumer robotics startup, basically a hardware startup. With the lockdown, we are unable to fulfill orders and don't know what's a good strategy to remain profitable in such a setting. We are taking pre-order signups, but that isn't a viable option in case the lockdown is extended further. Our team is currently working remotely on development of another product. So apart from sales, nothing is severely impacted. What steps do you say to hardware companies that should take to minimize the hit in sales during the pandemic? I think it's a great question, Jaj. Look, the reality is, if the country is in lockdown, currently it's on 3 weeks. It may be extended, may not be. We won't know for several weeks whether it will be. So you don't have revenue, right? So I think don't try to worry about things you can't control. Go back to the scenarios, figure out how much runway you have, figure out how to double or triple your runway, etc. Because that's the most important thing, right? Now, if assuming you have enough runway, I would do a couple of things. One, accelerate your product development efforts, right? Because a period like this is a really great time, one, to take a relook at everything that you're doing. What are you doing in marketing? What are you doing in product? What are you doing in engineering? And really double down, like relook at it and double down, because you can accelerate product development. The other thing, Jazz, to keep in mind, I know you guys are making consumer robotics, but industrial robotics are really, this could be the tipping point that the world has been waiting for, the robotics world, for a long time, right? Because what have we figured out here? That there are going to be a lot of things that need to get done, maybe that robots can actually get them done, right? So think about also new products. I don't know what your new product is, but if your new product is something that you think can be very interesting in a post-COVID world, let's call it that, in a post-COVID world, then you should really focus on that, work on your products, stay close to your customers. If you've actually, let's say, already sold to customers, call them up, stay close to them, see how your products are doing, get a lot of customer feedback, user feedback, because it's a great time to, get user feedback, take that user feedback, improve your products, and keep focusing on that, right? So if you've got runway to last, let's say, 12 months, 18 months, or even like 12, 18 months, then, don't worry about currently. Look, the reality is there are things you can't control. Focus on things that you can control, right? And keep going. Okay, I think I'll take 2 more questions. We have 2 minutes left. This one is from Raj. What do you think is the future of alternate meat, plant-based meat or cell-based meat, and alternate dairy in India? Will we see investments in the alternate meat sector? So Raj, that's a good question, but much like the blockchain question, this is not a sector I know a lot about. As you know, Raj, this sector has been booming in the US. But I would say the difference in India, as you know, is we have a large number of vegetarians, right? So alternate meat was interesting if you actually were, at least in the US, if you were a meat eater, right? And now you can eat alternate meat that's green and so on and so forth. Look, I mean, India, the question, we have 1.3 billion people. So we do have enough non-vegetarians to make it count. And we'll have to see, right? So much like anything else, I think this is one where we will have some companies probably launch some products. I haven't met any yet, but there could be companies that launch some products, and we'll have to see how consumers react to it. But again, Raj, what I would say is, you should reach out to experts who have expertise in this sector. We have 1 minute left. I'll take the last question. During the lockdown, aviation and hotel industry are suffering huge losses, zero sales apart from other industries. This is from Praveen Kapoor. How can technology help such industries so that they can reach the stage soon where they were before? How should they plan such things during the lockdown period? Look, so the reality is, if you're in the aviation or the hotel industry, if you're selling into those industries, the reality is it is going to take a long time to recover, right? And so modeling out the scenarios that you will, again, going back to this Medium blog post, I think is very, very important. And then especially in these industries, being extremely decisive about how you're going to extend your runway is super, super critical, because I mean, these are the sort of industries that are going to be locked down the most, right? And then beyond that, look, stay focused on the things that you can control, right? Engage your employees, drive very high employee engagement, engage your customers because they're there. They've been your customers in the past, treat them very well. Look for new green shoots, look for new ideas that maybe come out of what's out there in the market. And so on and so forth. So I think we got through a large number of questions, not through all of them. I really do hope that was useful. What we'll do is the questions that we haven't answered, we will take those questions and make sure that either one of the other speakers who's in a next AMA will answer them, or we will answer them at a later period of time. Thank you again, everyone, for dialing in. I want to thank Startup India team, Asta, Kritika, and a team, as well as the Thai Delhi team for helping us pull together. I want to tag all of you. We've got a huge number of you on the call. I hope this is helpful. The last thought I'll leave you with is, look, this is why all of you became a founder. Being a founder is the hardest job in the world. We know that. We work with many, many founders every single day. And this is going to be the hardest period that you're going to work through, right? So look at this as a period where it is going to be difficult. Be realistic about what it's going to take. But you became a startup founder because you were incredibly passionate about doing something that you thought the world needs, to build a team that could go build and ship a product that the world needs. This is going to be a very difficult period, but stay in there, try to get as knowledgeable as you can, be very, very thoughtful, and then be decisive. And what you should know is that the entire venture capital industry, all the angel investors, all the venture capital investors, and everybody else in the ecosystem is here to support you, and especially call out to the Startup India team, as well as the Thai Delhi NCR team that is doing a huge amount of work to make sure that we can provide the resources that you guys need, give you access to the experts that you can help as you go through this very, very difficult period. So thanks again, everyone, and stay safe.